Hi, my name is Anupam Saha. I'm an accountant. I regularly upload video in my TikTok, YouTube, and Facebook regarding how to save tax. If you want to save tax, please follow me in YouTube, TikTok, and Facebook. Today, I'm going to talk about how to save capital gain tax, or in other words, how you can plan to reduce your capital gain tax. Number one, use your annual capital gain tax allowance. In the tax year 24-25, capital gain tax annual allowance is per person £3,000. So if you dispose or if you sold something during this tax year and if your gain is less than 3,000, basically you can claim this capital gain tax annual allowance of 3,000 and you don't need to pay any capital gain tax. Number two, transfer asset to your wife or civil partner. If you're planning to sell a property and property is under your sole name, before selling, you can actually transfer 50% of the property to your wife or civil partner. In this way, you can get your 3,000 capital gain tax allowance as well as you can use your wife 3,000 pound capital gain tax allowance. You can save tax on the gain total £6,000. Number three, make use of your capital gain loss. For example, you sold or you disposed some asset during the tax year 24-25 and you made a loss in a state of a gain, and then later during the tax year you actually sold or disposed another asset which is made as some gain. You can offset the loss you made and with the gain you made during the tax year. Number four, plan when you're gonna sell or dispose your asset. If you have multiple asset you're thinking to sell, if you dispose or sold one during the tax year, if you don't need to dispose another one immediately, you can wait till 5th April, the tax year to finish. You can immediately sell that after the tax year finish, which is actually in after 5th April anytime. So it's gonna go to the next tax year. So in that way, you can save, you can use both year capital gain tax allowances. Invest in ISA. If you sell anything, gain or losses made on investment held in ISA, it is a capital gain tax free. So it is better if you can invest on ISA and get a gain, and that gain is basically capital gain tax free. This is just guidance. Your circumstances might be different, so I recommend you get an advice from a professional tax advisor. If you still need more help, please don't hesitate to contact me. Thank you.